pattern visible? So, well, let's start at the beginning. First, you see the chart in front of you. These are the corrective patterns under the wave principle. You have first the simple zigzag. This second one is a flat, 3 down, 3 up, sometimes to a new extreme, and then 5 down, ideally ending below A. This pattern is a triangle, 5 sideways waves, all in 3s, and then a bit more complex, a double zigzag, A, B, C, a rally in 3 waves, and then another A, B, C. When reports are coming out or data is coming out, what I try to do is I hone in on 2 of these patterns. Primarily it's the flat and the triangle. If I see one of those 2 unfolding, I think I have an edge in figuring out which way the market will respond. And the key point here is that the flat allows a market to move in 3 waves to a new extreme. The triangle does as well. Those are the only 2 patterns. So what I'm looking for typically is not to catch the top of that 3-wave move, but if that has occurred before the report was issued and the market has already started coming down so that I know that's a 3, then I can be fairly confident that any move down below this previous extreme, in the case of the flat, the A wave, will end a corrective pattern, and then the market will rally. And I see all the time that on the initial reaction, the market will come down and make that new low, and just a minute or 2 later, they'll reinterpret the data and then undo the trades they just did and go the other way. The same thing is in the flat. If I've just seen the market, if the market have been rallying, and then I can count a flat very near an end, my confidence is high that the reaction to the news will be a thrust to the upside. Now the triangle also sends another message. Many times the thrust from a triangle will be terminal. It will either be a 5th wave or a C wave, so you have to be careful. But at least the pattern gives me the knowledge of what reaction will occur, and I can try to take advantage of that. So with that behind us, let's move on. Using the dollar as our example, this has been my recent count. And let's just concentrate on the move down from October. I see that in 5 waves ending several days ago. That told me that no matter what the larger trend is, the dollar should enjoy some kind of recovery. Doesn't matter in this case whether that's a sustainable low and the dollar is going to have a large recovery, even a reversal, or just a corrective bounce. But I take things with minimums. I'm always looking at what's the minimum expectation, and in this case that would be a correction. And corrections often go to the previous 4th wave. So since we had this low earlier this month, I've been looking for a return to above 76 at a minimum. So I already entered today with sort of a bullish bias for the dollar. This is the intraday chart for the dollar. And I counted initial A, B, C, and X, which means I'm counting a double zigzag. Remember that from the first chart? This is it inverted, but it's an ABC X. I would expect in second ABC. So from this X, A, some kind of B, C. But you could see here, from this low to this high, which is slightly above the previous high, that is a 3-wave move. Couldn't be sure whether we're seeing a flat or a triangle unfold, but just that little pattern told me, or suggested to me, that the larger trend to the upside, even if it's going to later prove corrective, was still underway. But again, I mentioned before, I can look to other markets that are correlated. In this case, we can look to the euro. Now the euro is moves inversely to the dollar index. So here too, I'm counting this double zigzag, A, B, C, with an X wave. I need another A, B, C, and just look in this circled area, and you can see that's corrective price action. This is impulsive. This is impulsive. Even this is impulsive. This is corrective. So again, this also bolstered the idea that the dollar was going to strengthen, so this chart would go lower as the euro weakened. Why not take a look at cable as well? Same sort of thing. We had a nice double zigzag bounce into some measured objectives. Market fell sharply, and over the last day or two rebounded again correctively. So this should move lower. So right now I have a perspective offered from the daily chart of the dollar index that says the dollar should recover. We've looked at the short-term chart of the dollar, which suggests the dollar is going to continue climbing. We've looked at some charts that move inversely. First, the euro, a corrective pattern, should move lower. Same with cable. So now we can look to see what happened. Here is that consolidation. It turned out to be probably A, B, C, D, E thrust above 76. Remember, that's what we mentioned from the daily chart, the perspective, back to the upper end of the previous fourth wave. So you can see what I've been able to do here with a little perspective on the market, knowing my corrective patterns, which I'll admit is the most confusing part to many on the wave principle. Counting to 5 can be easy. Counting a simple 3 is not that difficult. But when we start getting into the flats, the triangles, and particularly these types of combinations, this is where people get confused. So that's why when reports are coming out, I just like to concentrate on whether I can see these two particular patterns, the flat and the triangle. And if I can, why not try to take advantage of them? Now, all these charts I've shown you today, except for the dollar index daily chart, were from the currency outlook and published this morning prior to the news coming out. So I just want you to know those are real examples. Those are the real charts. That's what was published. This is what we were talking about this morning, trying to take advantage of the news that propelled this movement. So again, the question I often get is, how do I use the wave principle? There are a number of ways. I use it to gain an overall perspective on trend. But at times I can come down and just look at these short-term charts, 90-minute charts, 60 minutes, and any intraday chart right up in front of a report due, and see if the wave principle is giving me at least a short-term perspective on what that reaction will be. And I know I've talked about this before in previous videos, but this is so useful that I just want to take today to repeat it a little bit more in depth than we have before, to make sure that you see how you can use this. So with that, I'll leave it there. You might need to watch this again, maybe a couple times, and think about it. Start looking at your charts for these opportunities. And with that, I'll leave it for today. Please continue sending in your comments and your questions. Again, this was based on a question I receive all the time.